Thank you so much for having me. I'm very excited to be able to be addressing you on this particular topic. Let me just make sure. Great. Excellent. It's all working. So this is the obligatory everything is really bad and getting worse slide. And you all know this, and the reason that I'm putting this up is to reinforce some of the interest in impact investing, which I'm going to be talking about today. I went from doing rights of nature pretty much full time to doing more of this impact investing work, in part because I think that unless we start to shift, the economic system, the financial system, some of the problems that we heard about yesterday, we are going to fail. And part of that is bringing this really difficult to articulate worldview of rights of nature and ecological law to the world of finance. They're completely different worlds, but we both have the same impetus, which is the increasing number of species and ecosystems that are disappearing. And just as an aside, the New England cottontail, I grew up in Massachusetts, it was once ubiquitous the early part of last century and is now on the threatened list. So for me, it's personal. Okay, still playing with this. So the United Nations has called very strongly for investment, global investment from billions to trillions. And this is because of the Paris Climate Agreement, the strong focus in that agreement on economics and finance, which is a side topic that we could talk about at length. I would have preferred they talk more about nature and the environment and greenhouse gas emissions and responsibility, but they talked about investments, so that's where we're going. That's where our audience is, and that's where we're going to be able to focus right now as we start to shift things. The challenge is that the Paris Agreement, even if it was implemented fully, at a minimum, would only get us perhaps a 3.3 degrees C increase, which is not good enough. We need no more than a 1.5 degrees C increase. So we're going to need to do a lot more investment to move us to what people call the low carbon economy. And again, this is all going to come together with rights of nature in the end. I know it seems a little bit discordant, but it will get there. So where are people thinking right now in the financial world? And again, we're talking billions to trillions of dollars being invested in our economy. And it's a difficult thing for me to wrap my head around, which is one of the reasons that I took this position, was to be able to start to move us in the right direction and take a leadership role in terms of where we're trying to get people to go with their funds. So where people are thinking right now is that this idea of the low carbon economy that's called for in the Paris Climate Agreement is growing, and people feel that's a good thing. Solar and wind power are becoming much more ubiquitous, and we're seeing that a number of nations we thought might not be able to get to 100% renewable energy are actually achieving that goal, and perhaps exporting renewable energy, which is incredibly exciting. There's also a lot of greenhouse gas emission reduction opportunities in the energy efficiency sector. And buildings turn over much faster than we think. But there's also transportation and industrial operations where we can have a lot of savings and reduce greenhouse gas emissions in the process. And one thing that people don't think about a lot is waste management. Landfills generate an enormous amount of methane, which is much more difficult for the environment than carbon dioxide. And as countries start to adopt more of our Western style of industrial development, unfortunately, it's true, it's happening, and we need to wrap our heads around that, at least in the short term. How do we address that waste? And collection and coordination of how we deal with it, on-site recovery, prevention of waste, can have an enormous impact as well. And again, it also saves local taxpayers money. You can save a lot of money in waste management if you're locating materials recovery facilities on site and reducing greenhouse gas emissions. Seems great, right? What's not to like? Okay, good. So here's just one example. I tried to find the reddest of red states, Kansas. Apparently Kansas loves renewable energy. Wind energy and generation in Kansas has grown 2,800% through this period in the 2000s, which was the most recent one that I could find. But today it generates over a third of its power, about a third of its power from wind. And it's providing an enormous amount for the state and in allowing taxpayers and ratepayers to pay less. And people around the country in many of these red states, Iowa, North Carolina, are finding that wind energy, solar, et cetera, are good for business, and they're adopting it more. So, this mantra of we need to do it for the environment, we may not be able to capture everybody with that message, and that's fine. If people can do things that are positive for the environment for other reasons, we should be happy about that, and we'll evolve over time to sort of thinking in a different way. But we are seeing some progress. So we're seeing, as these opportunities, and we saw earlier that, you can make money from this. More and more people are starting to look at how we could both make money and do good. And these are just a few funds, opportunities for investment, spending these billions, moving on to trillions, by some folks who you may have heard of. Breakthrough Energy is a significant fund that's being raised by Bill Gates, along with a number of other financiers and industrialists and entrepreneurs around the world. It focuses on their goal is a zero greenhouse gas emissions future. That sounds great. Their goal is to invest in early stage technology, new solutions that haven't been thought of yet. And another fund that people are looking at that has a slightly different focus is the RISE Fund, and you may have heard of Bono, you too. He's one of the leaders in this particular effort, but there are a number of other wealthy and very well-intentioned people who are developing this fund as a way of investing in not just greenhouse gas emission reduction, but other types of impacts that are positive: sustainable agriculture, energy, efficient energy, education for all, etc. So it's unlike Breakthrough Energy. They're not trying to find the next big technological solution. What they're doing is investing in companies that look like they have a really good solution. One example might be, Impossible Foods, which has developed apparently this wonderful burger that's going to change everybody's mind about meat. So, whether both the Breakthrough Energy and the RISE Fund won't have immediate impacts because it's investing in our future. But the RISE Fund looks at a number of different potential impacts, multi-benefit type of investment. And then finally, the third example is Generation Investment Management. That's Al Gore's fund. And he invests in sustainable businesses that lead us toward a low carbon economy. So rather than investing in private companies that are trying to get a leg up, like the RISE Fund, or new technologies like Breakthrough Energy, they're investing in publicly listed companies that you and I might trade in, on our tiny little 401ks. And they invest in these and try to leverage those and help those succeed. Again, they're not, they don't create new greenhouse gas emissions because they're reductions because they're investing in existing companies, but they're pushing that ball forward. And they don't have sort of the multi-benefit aspect that the RISE Fund does, but with Al Gore's name behind it, it's creating some positive impact there. So, what's not to like? Again, we need investment. We have to shift to this low carbon economy. This is the practical part of our day. We've got to do something in order to move. And this involves getting our hands dirty, getting involved with money, and what are we investing our money in? Are we creating new oil drilling facilities, new tar sands? Are we creating solar that creates good jobs for people, hopefully? And solar has created a number of good jobs here in the States, at least. So we want to be able to shift toward this economy that we talked about yesterday that supports mutually enhancing relationships with each other in the natural world. And what does that look like? An increasing number of really well-intentioned people, and in my work I've met many folks who are high net worth individuals or people with investment funds who, asset managers that I had not interacted with in the past. And many of them are extraordinarily well-intentioned. They really want to do good. And they also strongly believe that if you have a market rate financial return associated with what you're doing, then it will become self-sustaining. It won't be like, oh, you have to do this because otherwise everything will fall apart. You're actually going to do this because it's going to be good, and you're going to feel good about that, and you're going to make money. So it will sustain itself, as opposed to what a lot of foundations invest in, which are program-related investments, which are maybe 0 or 1% rate of returns, not market rate, but it helps advance some program, perhaps in an emerging, what they call emerging economy, the global south perhaps, to be able to invest some of these types of projects, but not expect a lot of return. That's more along the lines of grant making. We're talking about making money, being self-sufficient. Again, what's not to like, right? An increasing number of investors in asset management firms are screening their investments, not just solar, but all investments for what they call environmental, social, and governance factors. Are there environmental pollution issues that are going to slow down the investment? Is there a local community, a social issue? Have they been, have they been involved in this? Are they going to have problems with this project? And governance, is the company, does it only have, men running it, and are they, discriminatory toward minorities? Those types of things are considered on an increasing basis. That's really good. And I've got a link here for those of you like myself that didn't know a lot of these terms when I first started doing this work. People are starting to realize that investments that are not good from an environmental, social, or governance factor don't do well financially either. So a growing number of impact investors are not just screening things negatively, but they're also looking at, oh gosh, what impacts they would like to achieve. That's different. What goals do we have? Greenhouse gas reductions, etc. And they're also showing interest in evaluating performance against the UN Sustainable Development Goals. This is all great. But to fast forward with 4 minutes, the community-focused impact investing has become an area that is showing us how we need to do better. This all sounds wonderful, but it's still within the context of the existing economic system, which prioritizes financial returns over impact. One of the first questions I hear is, what is the IRR? What are the returns of this particular fund that we're talking about? I want to do good, but I also need to make money. This is particularly true for something like a pension fund. They have a responsibility to their pensioners. They want to do good, but they do have a responsibility to make sure that their pensioners are taken care of. So a number of reports, which I'll just flip through right now, and all the information is in the slides, which I will provide. You have been looking at how we can do better by communities and what some of the impacts of even renewable energy projects have been at the local level. And this was one that looked at a number of different communities around the world and heard very similar concerns like other investments that involve large areas of land use, which solar and wind tend to do, including the local rights to land and natural systems, indigenous peoples' rights, including whether or not they're involved in free, prior, and informed consent, and security issues, intimidation, harassment, even killing of people who protest some of these projects that they don't want. And so it had some recommendations about doing human rights due diligence and making sure that investors condition their investments on making sure this project is consistent with human rights, etc. Another example of work that's being done, and that was a 2017 report. This is a 2017 book that's fresh off the press. This is all very new. And it's finding that you need to have a deep connection with the community that you're trying to serve in order to be actually successful as a social enterprise. If you're remote and have limited ownership from afar, you're just going to create more wealth extraction. It's just more of the same. You may have a solar or wind system, but again, we need to start to create something new and transformative, and this is not it unless you're thinking about the community, and that's what these books and reports are saying. We need to engage the community. We need to leave more value and wealth in the community than we're taking out, and that needs to involve discussion. It can't just be helicopter in, put in a wind farm, helicopter out. Another way of, again, very practical way of trying to engage is a platform that's being developed by a nonprofit that partners with communities to ensure that they're involved in renewable energy transition. And they're developing this platform to allow for this communication and for data information to go back and forth from project developers to local communities, working very closely with indigenous communities as well. And Planet Pledge and these two organizations are sponsoring a side event that got approved at COP23 in Bonn in a few weeks on this type of community engagement. So we're seeing through these examples and these reports, which are all very new, that this growth in wealth disparity and this continued focus on wealth as a priority investment driver are problems that we need to be able to address. Just doing impact investing is not going to be able by itself to overcome these, just like just doing environmental law as it exists right now is not going to overcome the existing context, the system within which we live. We are seeing a really positive development in terms of people's interest in doing good. That's wonderful. but we still treat the natural world as capital. All of these reports focus on human social impacts. None of them really focus in any meaningful way on ecological impact. What are the overarching principles? Again, this gets back to rights of nature. The decision-making principle we heard yesterday is, does this action enhance the integrity, health, and functioning of the whole Earth community? And rights of nature is important alongside human rights, including the rights of indigenous peoples, in order to be able to start that transformational change. We need to be able to recognize when we're violating rights of nature, as well as when we're violating human rights and the rights of indigenous people, and create this type of transformative theory and practice on a regular basis. Again, I'll provide all of these slides. There's a lot of guidance, particularly in customary law, in which I'm not an expert, so I'll leave that to the experts who are. Some Western examples are Adam Smith himself, who recognized that the rate of profit is always highest in the countries going fastest to ruin. That's one of my favorite quotes. And it's true, we need to be able to think about this larger context and transformative change. George Dalton wrote about the motivations of communities, and communities here include the natural world, not just social communities. And Marjorie Kelly writes about how the corporate financial statement is just one story. We can create a different story. We can create a new narrative. Ecological economics is one way to be able to articulate this. It's becoming well developed. Josh Farley at UVM is one expert on this, who I think I might have stolen this graphic from. Our goal is not sustainable development. It's not the green economy. What's the goal? Thriving relationships, thriving communities across our shared planet. And what is the goal of our economic system? Not to maximize individual private wealth, but biological and social well-being. And the idea of wealth coming down to the community, that's important, but it needs to include the whole community, including the natural world. And if wealth includes natural systems, we need to restore natural systems to build that wealth. And we also need to find a better word than wealth. We need to ensure that nature is represented in our decision-making. And then here's some final steps with the Vermont State House. We need to build our allies, and we need to include the business community and impact investors who really do want to do the right thing and will help us. Tonic is a group of high net worth individuals that say that the world in which environmental and social impacts of their investments are considered first is the one they want to see. So we can work together to try to develop that type of transformative change that we want. We need to develop the messaging and make sure that we're really clear and consistent on that. And then finally, we're lawyers. Let's change law and policy. Let's include nature's rights in our laws. Let's bring wealth back to the natural world through restoration, make that a mandate, require investments to conduct due diligence, not just financially, but with regard to nature's rights and human rights. And then we can push legal requirements. Large-scale pension funds and sovereign wealth funds in other countries often have mandates to include impact investing. So this can include legal requirements and mandates to consider human rights and nature's rights, and start to create models for others. We can create new renewable portfolio mandates, again, along the same lines, create other types of substantive mandates like restoration, and then create new accounting standards. There's so many other examples that we could discuss. Those are just a few. I'd be very happy to talk about others, and I apologize. So thank you, and I would love some questions.
Thank you very much, Linda, for excellent integration of your approach into what we've been talking about here for the last almost a half. So, for about 5 minutes, now begins. Possible questions, comments?
Hi, Linda. Peter Burton here. It's good to see you again.
Yeah.
I just have a question about the consistency between people's desire to make money, some kind of technological revolution that you were discussing, and instruments like rights of nature or laws that call for the protection of nature. And I guess I want to know more about your thoughts about, say, a country like Bolivia, which has, as you know, interesting legislation around rights for Pachamama, and yet sits on top of one of the world's largest deposits of lithium, which is, as we know, a material that's fueling a lot of the technological revolution, large battery storage and things. Do you see an inconsistency between wanting to protect nature and that lithium deposit and at the same time needing to extract that material for a lot of the technology?
Yeah, absolutely. Thank you for that question. We could, obviously talk for hours about this. And I completely see the discordancy between, we're thinking about two worldviews here. This idea, the way that our investment and economic system is running right now is very much based on extraction and making money, just to shorthand it. But this idea of rights of nature is creating a different worldview, a different set of impetus for people. And Gaia Foundation, for example, did a great report on computers and what's the life cycle, and looking at what we need. Rare earth metals, for example, are almost exclusively in China. And the lithium, as you mentioned, is going to be driving this economy. And so one of the things we are going to be talking about in our side event at the COP is that very point, is how do you look at the entire life cycle? And it's not just one piece starting up solar or one piece starting up wind, but how does it fit within the context of the messaging that we're trying to create from the rights of nature worldview, is that our goal is maximizing biological and social well-being first. And economics is a tool to be able to achieve that. So how we articulate that message, which is something, actually I'm still evolving myself, and how to best marry these two things to move forward in a meaningful way. And that's something I'd welcome additional, if there's a subset of groups here, folks here who are interested in talking more about this, how to flesh out this messaging. I'd be really interested in doing that, because the way that I was thinking before is, there's only the rights of nature worldview, we need to create that, and this other stuff, just needs to come along. But in talking with people, I think that it will kind of are sort of tiptoeing into this other worldview, but still are very strongly entrenched in the current economic worldview. I think there's opportunity to bring people along, more opportunity than we've got. I'm actually much more hopeful doing this than before. So yes, there's an inconsistency, but I do think that we can start where people are, explain some of the problems that we're seeing in those reports, articulate rights of nature, and then show them a different way and see how we can go forward together.
Yeah. Hi there, this is Massimiliano Montini. And I have a question. This is, I completely agree with your approach of trying to reconcile, the investment rationale with the, rights of nature and social and environmental considerations. We have a similar problem trying to advance ecological law through our EGA group, because people who are not aware, the first question they ask, do you have example? Do you have concrete example to provide us? And I think I completely agree with your paradigm, but we need to show example where this has been achieved somehow. Do you have some example you can provide? Or because this, I think, will be the dividing line. If we are able to show that this is not just our wishful thinking, but it's real possibility, a real alternative, I think there is a possibility to a breakthrough. Otherwise, people will continue to say, okay, you are saying wonderful, thoughts, but this is not feasible. Let us do our business.
Yeah, no, exactly. And when I was doing just rights of nature, I would hear that quite a lot. And so there are some really good examples in some of the books and reports that I put up on the PowerPoint with regard to impact investing and engagement with communities. So advancing community well-being, social well-being, making sure that some of the wealth, some of the from the project, the solar or the wind project, stays within the community, that really good long-term jobs are created, that women and girls are involved, that there's strong involvement with the local indigenous community, et cetera, et cetera, et cetera. So there are good examples on the social piece. On the ecological piece, I'm still looking for those. So, and part of our job is to create those, so I want to be able, the Planet Pledge is right now part of the Leonardo DiCaprio Foundation. And that's a very strong interest of theirs, is to advance us towards that larger, more integrated worldview. And so hopefully part of what we're doing is try to push people along to create these types of models. But first we need to articulate what they look like, which is why I think it's so wonderful that we have this discussion yesterday and today and in Italy, and it is going to be ongoing, because we can articulate the parameters of what that looks like, and that will help us show people what that investment will look like.
Hey, Linda, Michael McGonigal here. Nice to see you again, even if on the screen. How are you?
Good. How are you? I'll be in Victoria in mid-November for the event, the 150 event.
Oh, good. Well, we'll get together. Great talk and very interesting work you're doing, an interesting strategy. My question sort of follows up from the other two, and specifically talking about narratives. One of the things that's interesting to me is how the narrative on energy has changed over the last, say, 30 years. And when you go back to 1970s, the narrative was all about reduction, energy conservation, you know, the negawatt revolution, all that sort of stuff. And even in BC, the BC Hydro shifted from building dams to exporting technologies and processes for reducing energy. The reduction side of things has basically disappeared. You know, it's a marginal thing, conservation sort of right there, but it's disappeared. And the question is, why would that happen? And to me, the reason it disappears is it doesn't make money. It makes money, it saves money. It reduces energy throughput. It reduces technological innovation in many ways. You don't need them as much. And so the question then is, how much is the renewable energy process itself really being driven, and the boundaries of the narrative being set by the need to make money? So, for example, how that plays out. In BC Hydro, there's been this huge debate over building a big dam in BC Hydro on the Peace River, right? And you've probably, I'm sure, followed that. And well, it's going to supply X number of houses with energy and stuff. No discussion about BC Hydro's old mandate. And yet, some of the side effects of that, so for example, everyone's moving to electric cars. But electric cars, we still have cities, you know, swamped in big, heavy metal things moving around, and people, when there's no public transit, where the darn, and so on. But it's making money for people like Elon Musk and so on. And so I think this question of the narrative would really be also facilitated by how can we invest in reduction? Who can invest in reduction? And maybe make a small return. So a whole strategy that parallels and balances the renewable energy approach with one that orients to reduction. And I think that's an element of this, which then gives tangible meaning to a lot of the concerns you have expressed later on about rights of nature and so on, reducing ecological impacts. So that narrative needs, I think, a balance in the rebalancing, I would say, in that other direction.
Yeah, I couldn't agree with you more, and it was just, you know, sort of a matter of time and focus to be able to include that. But absolutely, and as you know, and I'm glad you brought up BC Hydro, my experiences in water, and in California, you know, we have plenty of water. It's just not conserved. It's crazy. And so people are trying to build these giant tunnels to bring water down. There's a big vote yesterday actually on that. And in California, it's not just about making money off water, which people do all the time, and which is crazy, but it's also about power. You know, not to overuse the term, but you know, whoever holds water rights both has money and has significant power, political power. So this is something that, you know, I agree is part of this larger construct that we need to be able to break down, and creating the messaging that I was just talking about, and creating the worldview that we want to see. Absolutely, you know, we're going to be able to talk about what we're just saying about the lithium batteries. We need to think about sort of the circular economy. We need to think about, you know, how we live with the earth. You know, renewables is just a tool, just like economics is supposed to be a tool toward this larger goal of how we live with the earth. And you'll be, you know, probably pleased to know that, you know, a lot of folks that I do talk to who are on the investment side do articulate like, hey, you know, I don't feel like I need to make this much, or my clients don't feel like they need to make this much. They want to be able to do good. We're seeing with the millennials, they're happy to accept a little bit less in order to do better. So like this messaging is starting to creep through. I think it's up to us to try to capture that and guide it in the right direction. And conservation is absolutely, you know, part of this conversation that you're right, you know, needs to be rebalanced into the equation.
Thank you again very much, Linda, and questioner commentators.